is being created for the indices is the dollar strength trade. And the dollar strength trade happens about every 3 years. This interestingly correlates very nicely with the crypto winter that we experience. It doesn't always have as dramatic of a downside effect on the indices as it does on the cryptocurrencies, but it still is a drag on the indices. You can see here that the last time that we had a massive dollar strength trade, we were in at the end of 2021, the beginning of 2022, and you saw this massive rip to our measured move longs monthly target. And then as we came out of October of 2022, the markets had been ripping. They've ripped all the way into January, February of this year, and then made a double bottom inside of that support. That's what we're rallying away from. So the first thing that is creating a headwind is the US dollar strength trade. And there's a long ways for it to go, unfortunately. The second thing that is creating a headwind for the indices is the Fed rate cut lag. The Fed rate cut lag. Now, most market participants perceive the beginning of rate cuts as being the beginning of a stock market rally. What in actuality, it is the beginning of a downturn. And you can see all of these red ovals here. These are when the Federal Reserve, the tightening cycle ended. And those are tops of markets. Those are tops of markets. When you look at the majority of decline of these bullish trends, the beginning of bear markets, they occurred after a Fed pivot. And you can see all of them going forward here. The average decline is 22.2%, and it takes about 13 months for them to collapse. We made a study going back into the 1940s, and you can see here that the average rally and fall, the average we came up with was 11.07% rallies and then 22.2% declines. This is what happened in 2025. We had a rate cut. The market rallied 9.48% and then it fell 20%. Now it hit its price decline. It didn't hit its time decline. And so we went into another rate cut, Fed rate cut window in September of 2025. And I believe we figured out it was right around a 7% rally. Well, if we fell 20% or 22.2%, we would fall all the way into the 5,500s. So that is a considerable distance to fall, isn't it? In price. So that is the second thing that is going on. The third is the war in Iran. And what is going on in Iran is causing energy to increase in value. The crude oil confirmation of support is in. And when you look at crude oil, and we're going to go look at the crude oil price here right now, it has now confirmed its profit targets above. And if you look at the longer term time frame, there is a whole lot more room for crude oil to increase. We have these massive weekly support levels that we are inside of that have targets all the way up at $159.76. And if we rally to that previous 2011 high and run into that target, the increase in energy we have already witnessed affecting the broad markets. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.